This is Seewing Yi. My guest host once again is Mr. Richard Advani, a real estate investment loan agent who does loans in all 50 states. He's been doing it for a very long time. And we have great things to talk about. Welcome, Richard Advani. How are you?
Doing great. Beautiful Saturday morning.
Absolutely, absolutely. All right, so we are going to discuss, we're going to get back to the basics, the origins of the turnkey buying out-of-state long-distance real estate investing. Here's my take. I learned about real estate turnkey out-of-state investing around 25 years ago. I learned it from Marshall Reddick. If you heard of Marshall Reddick, everybody in Southern California heard of Marshall Reddick back in the late 1990s and early 2000s. People think he is the father of out-of-state turnkey real estate investing. No. In fact, I gone back even before that. There's this guy by the name of Adil Gorel. He's still doing it right now. Adil Gorel, he's an Israeli foreign national, but I think unofficially, it's just based on my opinion, Adil Gorel started turnkey real estate investing 40 years ago. He was an engineer graduate from Stanford here in the Bay Area. And he, even at that time, 40 years ago, he felt that the buying rental properties in California, even 40 years ago, it does not make sense, even back then, let alone right now. So he asked himself, I live in a very expensive California back then, and I need to buy rental properties. And the numbers, the cash flow wise, back in 1980s did not make sense. Turnkey out-of-state investing started way, way back, and most people are not even realize it. So I need to go back to the old days. Even you, Richard, you didn't start investing until 15 years ago or what have you. But back in the early days, this guy decided, he asked himself, he lived in the Bay Area at that time, 40 years ago, Adil Gorel, he said, I need to find a way to buy rental properties where I can cash flow in good markets. So he devised this concept of first, the blueprint he's using, which is still applied to today in more ways than one. He started off with using if he can find a 30-year fixed rate mortgage to finance and leverage his investments, that is his number one criteria. And then because he been a real estate foreign national himself, he grew up in the Middle East, Israel, I think, I'm not sure. Myself, I also travel in the past 15 years. Myself personally and my wife, we travel to like more than 50 countries throughout the world. And so whenever this guy said the same thing, and I'm repeating what I've run across when I meet with people, when I would go to all those countries over the years, and they ask me what I do, I say, I'm a real estate investor. And those people asked me when I was traveling in other part of the world, many times, he asked me, how you and your investors, how are you guys able to buy numerous properties if you live in one location? Then I told them we have a 30-year fixed rate mortgage where the mortgage payment never changes, even with the high rises of inflation over time and the purchasing power being eroded. These people asked me, wait a minute, in our country, we don't have 30-year fixed rate mortgage. We have adjustables. It's very difficult to get loans. That's why in developed countries, that when a person buy a home, they most likely they put a lot of cash, mostly all cash purchases. That's why a lot of people are renting in a developed world. In Europe, I go to Europe many times, and these people, they tell me, look, wow, America, you guys are amazing. If I live in the US, I would love to get the 30-year fixed rate mortgage and leverage my rental properties this way. So they were absolutely shocked that we have such an amazing 30-year fixed rate mortgage. That's the way you build wealth in the United States. And so they're all jealous. They say, hey, I wish I lived in the US because in my country, we don't have that. Going back to Adil Gorel, then Adil Gorel, back in 30 years ago, he started buying single family homes, brand new constructions in emerging markets. Something you and I continue to do this, right? My business model for my investors are the same. We're using the same concept. So this guy started buying in the Sunbelt markets, new construction in emerging market. Back in 30 years ago, he started buying single-family homes in Las Vegas, Phoenix, and some in California, not too many in the suburbs, and Boise, Idaho, in Austin. And then for the past 15 to 20 years, and recently, this guy and his investors are still buying in Florida, Georgia, North Carolina, Texas, right? Those Sun Belt affordable market, something that I've been promoting, something you're buying, your loans you're doing for your investors, they're buying in this Sun Belt, South and Southeastern markets. So at the end of the day, then he thought of another concept, use property management, right? By Turnkey. So he's been using property management and all his properties. And this guy, Adil Gorel, he was able to buy hundreds of properties in his personal portfolio, hundreds of single family homes, and some duplex and triplex and fourplex to mix it in. New construction, doing a 30-year fixed rate mortgage, and buying turnkey and property management, doing everything else. A lot of real estate gurus out there for years now, if they do not practice that's something you and I have been embracing all these years, buying turnkey, buying out of state, buying long distance. It works. This system have been around. Our buying system, our business methodology, you know that, right? Have been around for many years, way before flipping or syndications has ever started, or Airbnb or short-term rentals or mid-term rentals or BRRRR strategies, BRRR strategy. All these concepts, all these other real estate buying systems just been around for 10, 15 years, really, very brand new. At the end of the day, you and I continue to preach this system. It works 40 years ago, is working right now, and it can work in the future. Furthermore, our system using a 30-year fixed rate mortgage, leverage, buying multiple properties, scaling, using property management, buying in good markets, buying affordable markets, still are doing well. Our asset class that we use, buying 1 to 4 units, 30-year fixed rate mortgage, I believe, in my personal opinion, and I want your opinion as well, Richard, that this buying system, in my core belief, are better than fix and flip, better than syndications, better than buying multi-units, better than buying commercial investing, better than Airbnb, all those other systems, all those alleged real estate gurus are promoting in the past few years. And because in those other asset classes we have seen, there are some weaknesses, right? There are some downturns, there's some risk involved in other type of buying system that you and I have been experiencing, especially during these economic challenges. So with that said, what are your thoughts in terms of high level of the things that I touch on?
Yeah, I think you hit the nail on the head. And look, as an investor, we've always understood the idea of the 30-year fix and inflation and how it's a wealth builder. And most of us understand that from the surface level. Now, having experienced it on, I would say, a grand level, right? Properties I bought, man, even 6 or 8 years ago, but let's take 10 years as an average. Actually, I'd say probably 8 years as an average. Properties about 8 years ago that may have only been generating $200 a month in cash flow, which was still at the time a 7% cash on cash, right? It was a solid investment for a new construction property, riches and income coming in, and you're just trying to do what's right with your assets for the next generation. So you do all these 1031s, you've got millions of dollars by this point in deferred taxes. When you die, your heirs, your children, let's call it, they get what's called a step up in cost basis, right? So when you die, their cost on the property is what market value is, right? You do a date of death appraisal and you find out what it's worth. Okay, market value is this. So now that child's cost of that property is what market value is. Guess what? If they went and sold it the next day, they have no capital. All that deferred capital gains, millions gone, disappears, because child's cost was what it was at the time of death of a parent. And they sell it the next year, they have no gain, right? Because they bought it. Technically, their cost is right where it was at the peak. Talk about writing off millions of dollars of taxes that would have been paid. And if you think about it, we all pay at least 50% taxes, right? So that's a huge proportion. And that's, how a lot of these families, these elite families in the U.S. have built generational wealth, is through these tax loopholes, let's call them. And the 1031 exchange is a powerful one. Just defer, you die. It's unfortunate, right? To take advantage of one of the most powerful tools in real estate. You got to die first. It's good for your children. There's a lot of people out there that already have enough wealth for their generation, right? They're doing it to set up the future and create a legacy. And there's no better way to do that than real estate, right? Besides the fact that it's tangible, it's real, right? You die, you're like, oh yeah, you're going to find stock certificates and this and that and bank accounts, and you're going to find it. You're going to get the money that's coming to you. A lot of times you don't, though. People don't know of accounts that exist.
Yep.
That real estate is a tangible thing, right? It's not like, oh, do you know what drawer mom or dad kept that house in? Oh, do you know where they put the password for the house? Well, no, it's a house. Anyways, that's like, as we always said, the 30-year fix. And look, yeah, I'm biased. I'm in that business, right? Everyone get 30-year fix, everyone get loans because then I'll make more money. But set that aside. Unbiasedly, you look at how this program works, you look at how the product works. I'm not here saying, yeah, get ARMs and get mortgages. But getting fixed mortgages it's the cheat, it's the hack, right? It's the hack towards building long-term wealth and hedging against this crazy financial world we're in right now, where all these super elites are making all the decisions, right? And they're printing money and inflation's running rampant. And we're just along for the ride. Guess what? Get off that roller coaster ride. Buy something that hedges against it. That's guaranteed going to build you wealth, regardless of what's happening out there in the craziness of the world. So guess what? You own something tangible and real that has immense market value, that is the value driven based on supply and demand. And we're not meeting the demand with supply. At the moment, according to whitehouse.gov, I think we're 6.5 million homes short in the next decade. And that number is growing every year because they're still not building enough. There's so many new households forming and not really enough housing out there. I'm clearly long real estate. There's so many reasons to be. There's very few not to be. The only reason I would take a long, hard potential look at real estate, and if it's going to be the best potential option, if you have a 2-year exit strategy, yeah, maybe look at stocks or something else, right? But if you have any sort of long-term exit strategy, 7, 8, 10, 15, 20, 30 years, there is no better investment. It's proven, especially when you factor in leverage, right? On the stock market over 20 or 30 years may perform better than the real estate market in terms of gains. However, when you factor in that you're only putting down 5, 10, 15, 20, 25% of that real estate asset, and then that real estate asset as a whole is still going to grow, it's actually a better investment for what you invested versus stocks or really anything else. But to me, there's so many moving pieces in the securities market and the bond market and all these external factors. I want to invest in something that I have some relative control of and has some safeguards and protections against what the bigger powers decide to how they're going to move the economy.
Richard, you brought us some great points as usual. And my takeaway is that because of the skyrocketing home prices and the mortgage rate being elevated so much recently, we have a 40-year historical low in home affordability. And also we're in a historical low inventory and the demand is still very high in spite of the mortgage rates. As an investor, once again, another reason why right now, today is the best time to invest in real estate, because I believe this is a renter's nation. We are seeing more renters than ever before in history because the primary homeowners are being priced out of the housing market for all these reasons I just stated. And for risk investors, if you think your cash flow may not be all that high, believe me, they will systematically go high because there will be an abundance of renters going to be knocking down your door to try to rent your nice property, and the rent will go up because of the bidding war by the renters in many areas of the country. At the end of the day, I'll conclude with this. Real estate from a high level, just to agree with what you're saying, is that the real estate, historically speaking, is a multi-dimensional asset, is the most attractive historical asset, is the most tax-favored asset. Down the road, like you said, you could negotiate your properties in many different ways. Okay, you can negotiate, you can refinance the interest rate to a lower rate. You can pivot, you can do a tax-free catch-up refinance to buy more properties in the future. You can do a 1031, like you said. There's so many exit strategies. There's multiple ways to pivot from your real estate portfolio. So as long as you buy in the right markets, as long as you buy in affordable markets, mainly in the South and Southeast, where the home prices are the entry-level new construction homes are the most affordable, you can cash flow with 25% down payment, and with the great buyers incentive program, We can talk about this right now. So let's conclude this first module. Big picture is right now is the best time to buy. It's never wrong time to buy. All right, Mr. Richard Advani, thank you so much for your participation once again and taking time out of your day. This is Seewing Yi. Thank you for watching, everyone. We'll see you next time. Have a nice day. Bye-bye.